Welcome back to the Closing Advantage, strategic insights for title agents. Real property, real people, real stories, real consequences. My name is Bill O'Connell and I am your host. In this episode, we're going to cover the basics of the American Land Title Association's Homeowners policy of title insurance. In episode 3, we went over ALTA's Owners policy, also known as the Standard policy. Now, the standard policy is the more traditional form of title insurance, whereas the homeowner's policy of title insurance includes all of the fundamental coverages that the standard policy includes, such as undisclosed liens, ownership disputes, lack of access, problems arising from matters from public records. The homeowner's policy is designed for homeowners who want to live in the property. So it covers things that they're more likely to care about after closing, such as certain post-policy forgery issues, some building permit or zoning violations, encroachments, covenant violations, and the all-important increase in the amount of insurance during the first 5 years of ownership. Now, like I said in episode 3, don't feel bad if you haven't read the policy. As I explained, all policies are difficult to read because they're very precise. They have lots of defined terms, and you need context for it to sink in. It's not like reading a story. Now, the good news is there's still time. And the homeowner's policy was written with the consumer in mind, so you may find it easier to read than the standard policy. Today, we're going to break it down plainly, practically, and with a few stories along the way. So what is title insurance really? When most people buy a home, they understand homeowner's insurance. If the roof blows off or the house burns down, that policy responds. They may even understand flood insurance. If the water rises, that policy responds. Most people probably understand car insurance, but title insurance, probably not. Think about it. When you buy a home, what are you thinking about? Well, can I make the monthly payment? Number one. Can I fit all my furniture in there? Is the mover going to show up? Do I need to paint? Do I need to change the carpets? All kinds of stuff that they're thinking about that has nothing to do with title to the property. That's your job. So if you try to explain it to them, you just tell them it protects ownership rights. Because when you're buying a home, you're not just buying windows and doors and walls. You're buying a legal right to own, use, mortgage, sell, and enjoy the land and everything on it. So if there's a defect in that ownership, the house can still be standing, but life isn't going to be very easy for those who live inside it. That's where title insurance comes in. So many people know that there's a standard owner's policy, but they may not understand that there's a homeowner's policy that adds protection that they're likely to want after closing. It includes things that the homeowner thinks that insurance already covers. So think of it this way. The standard owner's policy is like a dependable pickup truck, whereas the homeowner's policy is the one that's got the upgraded model, the leather seats, the four-wheel drive, the navigation system, heated seats, the off-wheel package, everything they need when the road gets rough. Both get you there, but the homeowner's policy is the upgraded version. So think of it as the homeowner's policy gives you added protection when the road gets rough. And friends, I can tell you that from experience, the road can get rough. There's lots of stuff that we can't see, that we try our very best to ferret out, but the records related to real property are complicated, and closing a transaction is often difficult. So let's get them covered. Now, before we dive into the policy, I want to explain that, look, every policy is different. Every fact situation is different. Each transaction is going to be governed, or each policy is going to be governed by what's actually written in the policy. What are the covered risks? What are the exclusions? What are the exceptions? State variations of all of these forms, and the specific facts of any claim that may arise. So we don't want to assume anything's covered automatically, but I'm trying to give you general principles to help you understand so that you can respond when people ask you questions. So ultimately, you want strong underwriting and a careful review of each transaction, and um, that'll help you keep moving. So what makes oh, by the way, you always want to keep a copy of the policy nearby. I told you this in episode 3. Keep it handy, because if people ask you questions, you want to be able to pull it out and tell them, okay, so here's how this works. This is this, that. Keep it handy. Keep it on your desk. Keep the owner's policy, the standard policy, and the homeowner's policy handy. You're going to need it. So the homeowner's policy has 33 covered risks. Think about that in contrast to the standard policy, which has 10 covered risks. The homeowner's policy is designed for homeowners on 1 to 4 family improved residential property. So it's not for vacant land. It's not for entities or investors. The idea here is that somebody's going to live in the house, and it's designed to be lived in. So the standard policy covers things from the past. The homeowner's policy is designed to cover certain things that happen in the future. So, for example, it may include the situation where you bought the house, you've taken title, you're living there, you go on vacation and you're away, somebody shows up and impersonates you, gets a loan secured by the house, they forge your signature, they create fake documents. Guess what? The homeowner's policy is designed to protect you against that catastrophic event. It's not science fiction anymore. This happens every day. The criminals are working overtime times 2. Okay, they've got lots of tools out there to create fake credentials, and it's every day. I get calls every day. Bill, we just got this. It's not just one agent. They are all getting bombarded with this stuff. So that to me is a huge benefit of the homeowner's policy. Building permit issues. So suppose you buy a house, got a beautiful deck. Summer arrives, the grill is fired up, you got family invited, life is good. Then you learn the deck was built without permits, and now it must be removed. This can get expensive quickly. The homeowner's policy may provide valuable coverage in certain circumstances involving forced removal because prior owners violated building permit requirements. That's real money, real stress, real values. And don't think it doesn't happen. It happens, even in the most unlikely situations. I had a claim one time where it was a condominium, 2 owners back. Guy bootlegged a 3rd bedroom into the attic and sold the condominium as a 3-bedroom unit. And so the guy who buys it from him lives there, no problem. Then the condominium gets sold. New owner moves in and sees that there's some water damage around a window, and so they call in somebody to take a look at it, see what needs to be fixed, and the inspector's like, yeah, I think this doesn't look right. I think you need to get a structural engineer in here to figure out what's going on. Engineer comes in and says, yeah, this is unsafe. You cannot live here because this whole thing upstairs was not built to code and it's not safe. The county comes in, red tags the whole unit. Guess what? They got to leave. So the homeowner's policy protected those folks because they got it. Then we have zoning and land use problems. You buy a property believing the guest suite is legal. Later, you learn it violates zoning rules and cannot lawfully be used as represented. Depending on the facts and the policy terms, the homeowner's policy may provide broader assistance than a basic policy. The policy may help when the home you thought you bought is not legally the home you are entitled to. Again, don't think this doesn't happen. I've seen it before. Somebody bootlegs in a, granny unit, full kitchen, the whole works. And then lo and behold, county shows up and says, yeah, no, this isn't legal. You can't have this. Take it out. That's a problem. You also have encroachments and boundary issues. So think about it. One fence, two neighbors, three opinions. It's the classic real estate formula. It's as old as dirt. My neighbor's garage crosses the line. Maybe your shed crosses the line. Maybe a driveway sits where it shouldn't. Boundary disputes are old and they happen every day. A homeowner's policy can protect against some of those things. I had a claim one time. It took a year to resolve. You would think that it would be very simple. The neighbor tried to be helpful to replace an old fence. Now, the insured was like, I don't think it really needs replacing, but you know what? If you want to replace it, go ahead. Well, guess what? The guy puts it back in, swipes 18 inches, okay, because he put it right up against the walkway that was running along my insured's property. And I mean, yeah, the walkway on the side of the house. And immediately the insured was like, I'm sorry, that fence is in the wrong place. You got to move it. The guy's like, prove it. So the insured goes out and gets a survey. Sure enough, the guy swiped 18 inches of land, shows the guy the survey, and he's like, I don't believe it. I'm going to get my own. Never does, never moves it. Meanwhile, he installs a patio right up to the new fence line. And so finally exasperated, the insured tenders a claim. We pick it up and I had to sue the guy because he wouldn't move it. And he got counsel and they're defending it. Eventually they said, fine, we'll move it. But it took a year and that was expensive. So, but it didn't cost the insured anything because the duty to defend or prosecute on behalf of the insured is covered under the policy, just like the standard policy. So the homeowner's policy also includes increased insurance amount. And so for the first 5 years, the policy goes up 10% every year. And so at the end of the 5 years, the policy is worth 150% of the amount of insurance that is stated on it. So that means that the homeowner's insurance grows while the insured's equity in the property grows. That's worth understanding. That's worth the extra premium all by itself. If you've ever bought homeowner's insurance, car insurance, whatever, you buy it every year. Title insurance, you buy one time. Car insurance, it's always going up. I don't have any accidents. My car insurance keeps going up. Homeowner's insurance, yeah, it keeps going up every year. So this is a great value for the insured. What else do we have? Okay, so here's another one. I know you like stories, so I'm going to tell you one. Couple buys a charming home. They got a backyard patio, stone fireplace, outdoor kitchen. It's the works. It's the most beautiful outdoor patio and kitchen setup you've ever seen. They're hosting birthdays, graduations, Sunday dinners. Turns out one day the county notice arrives. The prior owner built this whole apparatus without getting a permit and or approvals. And now the county's demanding removal because it is over an easement that the county needs. And so they were lucky because they had a homeowner's policy that took over. So when life gets hard, policy can respond. So at the closing, people buy policies with signatures. Years later, they appreciate them with emotion. I don't know if you've ever filed a claim on behalf of yourself or anyone else for any policy, okay? When you get the word that it's a covered matter, it's covered, that's a relief. Even though you think it might be covered, until the insurer says, yeah, this is covered, we'll take care of it, you don't get to relax. So homeowners policy helps them relax. So who should buy a homeowners policy? By the way, the homeowners policy is not available in every jurisdiction. So if you're unsure if it's available in your jurisdiction, contact your underwriter. They will know. So who are good candidates for this policy? People who are planning to live in the house long term, buyers stretching financially and wanting broader peace of mind, older homes with additions or modifications, unique lots with quirky boundaries, homes with fences, decks, sheds, pools, and retaining walls, buyers who simply want stronger protection for their largest asset. In other words, a lot of homeowners. Pretty much every homeowner should want the homeowners policy. So why should realtors and lenders care that their customers buy the homeowners policy? It's because they hate callbacks too, and these things that are covered in this policy are helpful to their customers. So the best thing to do is when you get asked about whether I should buy the homeowners or the standard policy. Now, don't forget that the homeowners policy costs more, but what you want to sell them is you don't pressure them, you don't scare them, you educate them. So if somebody says, "Why would I need to buy this enhanced policy?" That's your moment. You don't sell fear, instead sell understanding, because informed buyers make better decisions and trusted professionals build repeat business. And that is a closing advantage. So how would you explain this to a customer? You can simply say the standard policy protects ownership rights. The homeowner's policy adds broader real-life protections the homeowner would appreciate after they move in. It's clean, it's honest, it's effective. So think about this. You're not buying extra paper. What you're buying is you're recognizing that homes are lived in. They're improved, they're inherited, they're refinanced, they're enjoyed. And sometimes they get challenged. And I tell you, if I got lots of friends who don't like to get permits, they want to just do it. Why do I need that? I've seen where eventually the county figures out that a permit wasn't obtained. And guess what? They require things to be torn out because they can't see behind walls. And that gets expensive quickly. So get the homeowner's policy. So you don't need to just quote a price, explain the value. Remember, don't just close it, own it. That's your closing advantage.